So today I was doing some research on the Solana ETFs, and I came across a very interesting discovery, and that is all of the ETFs and all of the interest from institutions seem to be around layer 1 blockchain cryptos. However, us crypto investors know that we don't need more layer 1s. So really what's happening and why do we have this continued wave of just money pouring into layer 1s? And what's really going on here? So I dug a bit deeper and I actually found something much more interesting than what I was expecting and something that nobody talks about. So today I'll cover exactly what that is and the reason why we will be seeing a lot more layer 1s, and you shouldn't discount them. Not because layer 1s are just so unique that they are the next big thing, but because everything seemed to be required to be a layer 1 in order to be friendly in regulations. So that's the big teaser I want to give you guys. So let's get right into it. Before we get started, if you're new here, welcome. My name is Dennis. I am a crypto angel investor for the past 6 years now, and I have invested in over 100 crypto startups. On this channel, I share views on market trends and investing strategy to build wealth in crypto. As the Solana ETFs just got approved this week, this is actually a spot ETF. It's a staking-based ETF. So just like the Bitcoin and Ethereum ETFs coming from BlackRock, this one also is spot based. So it does require holdings of Solana, which is a big step. So this is why analysts coming from Bloomberg, the crypto ETF experts, James Seyffart, he puts the approval rates for the next ETFs to be at 95% chance. So these include the next basket ETFs, Litecoin ETF, XRP ETF, Dogecoin, Cardano, and then Polkadot, HBAR, AVAX, SUI. So these are all very likely to be approved sometime in Q4 of this year. Now, this isn't big news anymore. I don't think there's even a trade here. Just look at the performance of Solana so far this week. Nothing really has happened much. People were expecting Solana ETF to be approved, and that's why we haven't been seeing much action at all. The actual inflows to the Solana ETF is positive, so it does enable institutional investors to get in. However, I don't think this news is anything significant. It's basically been priced in for a while already. Same as the other ETFs to come this year. I don't think it matters much. They will come. Okay, so if you're looking for entries into Solana, so I have started to do something new on the channel, which is to have a copy bot strategy. It's a grid bot strategy that automatically buys low and sells high. So we're using the platform called Pilenex to do this. I'm not going to go too deep in how these work, but basically it's a grid strategy that just buys Solana continuously, slowly, until the lower range at 95K, and then it will sell very slowly all the way till 600. This is a long-term strategy that matches my long-term exit strategy on Solana. And I also have them for Bitcoin, for Ethereum, and I plan to do more bots in this fashion for other coins in my portfolio. So you can check those out with the first 3 links in this video. And I will have a full tutorial coming up for this next week. And so far, these bots have been doing okay because the market hasn't been moving in either direction, but you see they already have some extra profits on top coming from the grid strategy. So I'm not going to dive into that today. Look out for the tutorial coming next week. But if you're already familiar with grid bots, you can go ahead and use them with the link in my bio. Okay, so back to the ETFs and layer 1s. So you notice how all of the ETF filings today that we have are all around layer 1s. The only exception is actually Pengu, which is, I don't know why, it just seems that they have a very close relationship with Canary, and that's why they filed. But the Bloomberg analysts actually put it at a kind of a low chance to be approved compared to the other layer 1 ETFs. Now, there are others on this list that they haven't covered. For example, Aptos and Stellar, I believe. I think even Algorand has one. So basically, it's all layer 1 blockchains with ETFs and high approval chance. Now, this is very curious because when you look on the, just directly go to CoinMarketCap, it's not actually consistent with what people like to trade. For example, why doesn't Chainlink have an ETF? And why doesn't, like Shiba Inu, for example, right? And Uniswap, right? Uniswap is this big, DeFi utility coin that seems to be all the buzz right now. So why doesn't it have a ETF? Or Maker, for example. Maker is the big, decentralized stablecoin project, but it has no buzz at all. So, and it has been around for much longer than most of these layer 1s. Maker's been around since 2017. So the reason behind this is not because people like to trade layer 1s or, institutions like to invest in layer 1s. No, it's actually because of regulation. So you guys know, next week, the US House is coining this week as the crypto week. And specifically, there are 3 bills that are being considered next week: the Clarity Act, the Anti-CBDC Surveillance State Act, and the Genius Act, which is to do with stablecoins. So the Genius Act I have already covered before. It's just to put together a framework for US stablecoin issuers, how much treasuries and backing they need to have, reporting process. The Anti-CBDC Surveillance State Act, pretty basic. It's just no CBDCs. The Clarity Act is actually the main thing I want to cover today. People don't know what this is. So this is an extension of something I covered before last year, right before the elections, called the Fit for 21st Century Act. I covered this in depth 8 months ago. So this basically lays the groundwork for the US SEC and CFTC, which entities are going to oversee the issuance of new cryptos in the US. Now, this act, although was quite popular, it did not pass fully. And it did not come into law. So this new act called the Clarity Act is basically an extension of that. And they even stated this in their official, whatever you call this, like prospectus or something. A lot of the terms in there are very similar. But something very unique in this new act is that it leaves a big gap between native coins to a blockchain network, a layer 1 or layer 2, versus a non-native token. And specifically, it leaves out non-native tokens as potential securities. So this includes Chainlink, which today still exists as a token on ERC20 on Ethereum mainnet. And for example, Uniswap is a token, MakerDAO token, Aave is a token. So a lot of these things, PayPay, right? A lot of meme coins are tokens, except for Dogecoin, right? Dogecoin has its own layer 1 blockchain that's proof of work based. Even though it's not smart contract based, it is a full-fledged blockchain. So anything that's a non-native token to a blockchain network is not covered in the US Clarity Act. This is the key here that I discovered. So you can just kind of Google this, right? US Clarity Act, non-native tokens as securities. I'm going to go a little bit deeper here. So there's a lot to read. You can read the official PDF, which is somewhere on this page. But the summary of it is here. So in the Clarity Act, it sets the framework of you letting the SEC take a back stance, so they won't be going after all the issuers of new coins, and putting the power into the CFTC's hands, which is the commodities overseer in the US. Now, then they have coined this term digital commodities, which is a set of classification for a large list of cryptos to be traded as digital commodities and not securities. But very specific. The bill contains 4 ways a digital commodity can be issued and defined this way, classified this way. And that is they need to be a digital commodity related to a blockchain system. A blockchain system here is defined as a distributed ledger technology with open source code and automated distribution. And then the digital commodity needs to be intrinsically linked to the blockchain system. So you see where this is going. And there are 4 ways that they have specified for this relationship. Number 1, the value of the digital commodity is generated by the programmatic function of the system. In which case, it could be proof of work, right? You mine Bitcoin and you generate Bitcoin. You mine Litecoin, you generate Litecoin. You mine Dogecoin, you generate Dogecoin. Or it can be proof of stake, right? You stake Ethereum, you get more Ethereum. You stake Solana, you get more Solana. Second, the digital asset grants voting rights in the decentralized governance. So this is, EIP proposals, Solana proposals, or in the case of Bitcoin, it's directly in the consensus. Number 3 way that they can be linked is that the digital asset was issued through the programmatic function of the system. Or number 4, the digital assets can be used or removed from circulation to pay fees or otherwise validate transactions. So 3 and 4 are very similar. Basically, these are smart contract networks. So if you have this distributed ledger technology, it doesn't have to be a linear blockchain. It could be a DAG, for example, like in the case of Hedera hash graph, right? That's not a blockchain, that's a hash graph. As long as it's a digital distributed ledger technology and it has smart contracts, it has transaction fees, so that the coin is used to pay for fees and then to validate the transactions, and it's removed from circulation, which is also related to the programmatic function of the system. There is software involved in smart contracts, then that is a digital commodity. So you see where this is going. This clearly applies to all the these coins, right? Obviously, for all the smart contract systems, Dogecoin still applies because it's mining, it's proof of work. It has its own Layer-1 blockchain. There is fees to be paid in Dogecoin when you send Dogecoin, okay? Even though there's no smart contract. And Dogecoin comes into existence from mining. However, when you look at these things we've talked about, for example, Uniswap, it doesn't get removed from circulation. The ERC20 version doesn't. Uni chain, the Layer-1 chain that they proposed, does apply to this. So this is actually starting to show, right? They did this purposely to make their coin work in some way as a Layer-1 coin instead of just a ERC20 token. And this explains perfectly the case for Chainlink. Chainlink is so established, it's used everywhere. But because it's a ERC20 token and it doesn't have its native blockchain, even though it has, it's used in the Oracle ecosystem, it's still a little bit less fitting for this Clarity Act definition compared to other Layer-1 networks like AVAX, Sui, Cardano, Tron, even Dogecoin. So that's why, that's basically the reason why we have so many Layer-1s. It's not because everyone needs Layer-1s or more Layer-1s, but it's because in order to get into this next stage of US regulation and what defines a digital commodity, if you only issue your crypto as a token, and it doesn't fit one of these 4 ways that puts it in the basket of a digital commodity, then it doesn't work. So this is the core reason. And that's why, I don't want to discourage everyone from investing into Layer-1s. I think in this cycle, the US and the US regulations, what they find friendly, is going to be defining what gets listed in the US exchanges, right? And the big US TradFi exchanges, Robinhood, etc. So everything is probably going to be in some way their own blockchain, their own distributed ledger. Maybe it's a layer 1, layer 2, something even nobody really uses. As long as it classifies them as a digital commodity, they will do it. So don't get turned off anymore the next time you hear that you have this like application thing that's pretty nice. For example, Hyperliquid, right? It trades as a perpetual exchange, but why do they have this hyper EVM? It's because it puts them in the same basket as a digital commodity, right? They need to have a layer 1 in order to fit in. So yeah, I think that's very interesting, very unique, and gives me another way to think about this process. I no longer see a new coin saying that they are a layer 1 as a bad thing. In fact, that means they know what the regulation is moving towards, and they have studied what the next acts coming from the US government and the US regulators are going to favor. Okay, so that is why we have so many layer 1s. Now, which layer 1s actually still make sense? Which ones even matter? So I'm going to give you, actually, I have laid out a little bit of a spreadsheet as to which layer 1s I think belong to each narrative and actually are still interesting. So there are 7 narratives here. At its core, if you only have a layer 1 but you don't cater to anything interesting, that's meaningless, right? So I think there are really 7 things that somewhat work in the crypto bubble as a whole today. So first, you have RWA and tokenization. The main chain that has always served RWAs is Ethereum. BlackRock's fund started on Ethereum. All of the major institutions' funds started on Ethereum. Solana is starting to catch up with this new launch of X stocks. You guys probably have heard of these, where there are a lot of large publicly traded companies now that they are being tokenized on-chain and tradable on-chain. These are handled through Solana. So when it comes to RWA and tokenization, you have Ethereum and Solana. I don't really want to put other, like the likes of Ondo or Mantra or like Plume, those kind of stuff in here because, they are layer 1s, but they're more, SaaS-based business, technology business, instead of a full-fledged, layer 1 that supports the underlying liquidity layer. Okay, the next narrative is chains that are popular in the crypto traders crowd, in crypto Twitter, for example. At the very top there, of course, you have Solana. Solana dominates in this area. Then you would have Base, which is still decently popular, but they don't have their native token. And then you have a little bit of interest starting off on AVAX, especially with gaming. So gaming, I have listed it as a separate category here as well. When it comes to gaming layer 1s, there is basically only one chain left that hasn't given up and still continues to double down, triple down on gaming, and that's AVAX. So if you believe gaming is going to come back as a narrative, basically AVAX is the only place, only layer 1 chain that is still putting more and more resource into gaming. So that is honestly pretty commendable. So if you're a believer in the utility of crypto gaming, that is going to be AVAX. Next, we have the hyperscalable layer 1 blockchains. Now, Sui and Aptos. And maybe you could put Monad here when it launches. I don't know when. It just keeps getting delayed. So these two are really hyperscalable in the sense that they are comparable to Solana, and they use a similar technology stack that's based on Rust with their Move programming language, their technology stack that's similar to the Solana development stack. Now, I think Aptos is more interesting than Sui, simply because there's a big gap between the two. So let's see. So Sui is already 30 billion in FDV, 10 billion market cap, whereas Aptos is 5.5 billion FDV, 2.3 billion market cap. Why is there such a big difference? Honestly, I don't know. I can't tell you. But to me, like Sui has been performing quite well this cycle. But comparing Sui to, for example, Solana directly, I don't think it's going to replace Solana. So I would much rather just have more Solana exposure versus Sui. But when you look at Aptos, right, you have the same developer base, right? You have the same wallet base. You have the same technology stack based on Move. So I have covered Aptos, I believe 2 weeks ago when we covered the Genius Act on the channel as a live stream. We covered this news where there is a stablecoin project that's being actively worked on in the US called WIST, W-Y-S-T. Now, in my last coverage, I didn't read this correctly and I was reading it as a US state-backed, but actually WY stands for Wyoming. So it's backed by the specific state of Wyoming. So the state of Wyoming has a stable coin that they plan to issue, and they have studied many different layer 1 blockchains. And among that list, it's Aptos and Solana, that the two chains that they might use. So nonetheless, Aptos is pushing in the stablecoin direction, and that's being enabled by the Genius Act, which will soon pass. And the Aptos CEO, Avery Ching, has joined the CFTC's subcommittee for digital assets. So this directly relates to how the CFTC will govern, will regulate digital commodities going forward. So they're putting themselves very close to the regulators. That's why I'm looking to build up an Aptos position, especially if we can get lower towards this entry range, right? Next time we get a wick towards this parallel channel, I think that could be good. So yeah, I don't think Aptos is going to be a long-term hold in my portfolio anymore, but we're getting very close to some value ranges. And I really like to buy coins when they are cheap like this, right? When they're near these support ranges. Okay. So that's on the layer 1 categories. The next major category is the payments layer 1s, the ones that have been around for 2 to 3 cycles, and the ones that are very popular among retail traders. So at the top of this list, obviously we have XRP and we have Cardano ADA. Not much to talk about here. Huge fan base for both, and both are going to get ETF approved this year, most likely. Both of them are compliant with the ISO 20022 standard, and they fit into the retail category really well. So whenever retail comes back, first 2 coins that they flood into are XRP and ADA. Similar to XRP and ADA in the same narrative, a little bit lower in terms of market cap, we have Stellar Lumens, XLM, and then we would have HBAR, XDC, and Algorand. So these are pretty much the layer 1s ranked by exact market cap in that narrative. So whenever XRP pumps or ADA pumps, you should look at XLM, you look at HBAR, you look at XDC, you look at Algo. Most likely all of these are going to get ETFs approved as well, probably in this order. So XRP and ADA to come first. HBAR has a high chance of approval as well. The analysts have put it at 90%. This is because HBAR has had a long history of dealing with the SEC, and the SEC has actually come out before, I believe in 2019, like this is a long time ago, that they have stated that HBAR is not a security. So this is why HBAR is likely to get an approval quite soon as well, probably after XRP. Okay, so these coins, not too much to talk about there. So it used to be that CBDCs were very popular, and these were the main chains that there were going to be issuing US-based CBDCs. But now that we have this complete turnaround of anti-CBDC surveillance act, so CBDCs are no longer relevant, and that's why none of these chains are chasing CBDCs anymore. Okay, gaming we have already covered. We have AVAX as the only chain, basically. AI, so Tau, Near, I believe both of these are going to get ETFs. If you look at, again, the Clarity Act, right, these four criteria that puts a layer 1 native coin as a digital commodity, BitTensor Tau clearly fits into here. They are generated by the programmatic function of the system. BitTensor is actually being mined. And voting rights, programmatic function, BitTensor fits into both. So Near protocol, I don't think it's generated by proof of work, but it is proof of stake, and it is issued by the programmatic function. And because they have smart contracts already, Near protocol does fit this as well. So I would say Tau and Near are both in the AI layer 1 category. It's just, it's taking some time before they work into this subcategory of layer 1s. And then finally, more interesting is the stablecoin related layer 1s. Now, stablecoins is a huge narrative for the US. And you can go back on our channel and look at the last live stream I have done where, wait, did I cover this yet? I believe I have covered stablecoins and their issuers a bit on this live stream here. But simply put, the US debt problem is closely related to how many purchasers there are for US treasuries, okay? And the reason why the US really wants to get this Genius Act approved is because they want to enforce that all of the US-based stablecoin issuers for USD stablecoins, they need to buy treasuries or they need to buy dollars or something related. Obviously, they will all buy treasuries to get the yield. So Tether, USDC, and USD1, which is the Trump family office-backed stablecoin project, World Liberty, these are all going to be holding treasuries in their backing for the issuance of their USD stablecoins. This is going to help the US government directly because they need large buyers of US treasuries. So this is why they're going to keep pushing stablecoins forward and their issuers. So in this category, there are basically four stablecoins that matter today. Of course, number one, you have Tether, USDT. That's the biggest by market cap. Which chains have the biggest flow in Tether? The first chain is actually Tron, TRX. So if you use if you use Tether for payments, you use it for, cross-border money transmission, you have used Tron. And I myself, I use TRX, I use Tron-based USDT on a weekly basis. I don't use USDT payments on any other chain. I don't exactly know why, but it's just supported everywhere, especially for international. Not so much for cashing out, but for paying for services. It's always happening on Tron. So that's why I think don't discount TRX. It's actually pretty interesting. So I don't think Tron is being used in any other way right now, aside from just sending and receiving USDT. But that's a big usage, okay? So Tron, its performance is actually also quite good over the past year. Slow but steady. Over the past year, it's been up like more than 100%. But basically, nobody talks about this. So that's Tron. And then you have Circle. So after Circle has gone public in their IPO, it's basically the only asset you should hold if you want to bet on the success of USDC stablecoin. Coinbase no longer holds any share in the issuer of USDC because Circle, before going public, they purchased the holding rights back from Coinbase so that it's no longer jointly owned by Circle and Coinbase. Now it's totally owned by Circle, the issuing company, the issuing so-called entity behind USDC. So if you want to bet on the the adoption of USDC stablecoin, you just buy a Circle stock. And most likely, they're not going to have a chain. Now, for DAI or SUSD, it's called, USDS, that is called today, there is still a pretty compelling trade to be investing in Maker. This is the main issuer of the #1 decentralized stablecoin, DAI, USDS. They don't have a chain yet. Maybe at some point in the future, they will have a chain in order to be friendly to the regulators and become a digital commodity. So that's something interesting, and that's why I have put Maker here. And same thing for World Liberty Fi. Don't discount this, right? This is already the third largest stablecoin by market cap today. Look on CoinMarketCap. You have Tether, you have USDC, and you have USD1 right here. So USD1 is already at a 2.2 billion market cap, and it just keeps growing because this is directly backed by the Trump family. So the governance token for USD1 is World Liberty. And there's a lot of buzz going for it right now. They're going to enable trading maybe sometime in the next few months. And I wouldn't be surprised if they do their own chain as well in order to be fully compliant to be a digital commodity. And then finally, if there is some other, Tether chain coming up, definitely pay attention to that. I did cover this in this Altcoin Alpha video before. There's a chain called Plasma. There's another one called Stable. Both of them are being heavily backed by Tether co-founders, although I don't know which one's going to be like exclusively the Tether chain, if any. But if something happens here where Tether, puts a lot of their issuance on any single layer 1 chain, that's going to be very interesting investment potential, because just consider the big gap, right, between Tether market cap and USDC market cap, right? Tether, $160 billion market cap. USDC, $63 billion market cap. So that's a 2.5x difference. And Circle stock, it's already trading huge, right? So whatever Tether, and you can't buy Tether stock. And I highly doubt Tether is going to go public. So yeah, whatever chain that Tether really lives on is going to get a lot of traction for this cycle. And that's basically it. So that's all of the layer 1 categories I think are actually worth investing in. You see, there aren't really any other small layer 1s or new layer 1s popping up that is on my radar. Simply put, because the US House and the US Senate and the regulators have this Clarity Act, which defines a digital commodity to be related to a blockchain network and a distributed ledger. So chances are, for any significant project coming up, they are going to create a blockchain network no matter what, whether that's a layer 1, a layer 2, or a proof of work mining-based network. Something has to be there in order to be a digital commodity. So I'm not going to keep hating on new layer 1s, and nor should you, because this is part of regulation. And that's the main reason. But let's get past that phase, and let's get past the color glasses and just look at what it is. Layer 1s are okay because it puts them as a digital commodity, but which subcategory of layer 1s is actually useful and an interesting narrative, I think that all sits here. And that's it. That's everything I wanted to cover about layer 1s. Every time we make a video covering any layer 1s, people always have this big anger towards layer 1s, like, haha, I can't believe you're talking about another layer 1. Why is this project doing a layer 1? It's because of regulation. It's not because they are only doing a layer 1. If you want to follow me more, you can follow me on Twitter on at virtualbacon0x for quick alpha before I make them into live streams and in-depth videos. Check out our trading bots and trading strategies, grid bots in the link in the description. If you want just a set and forget kind of strategy for Bitcoin, Ethereum, Solana to slowly buy the dip over the rest of this bull market, look out for a tutorial coming up next week. And yeah, that's it. That's everything I have prepared. Thank you for joining, and I will see you on the next video and next live stream. Bye bye.